Hey everybody, this is Jeff Swing Trade Warrior with WarriorTrading.com, back with our weekly swing trade video recap. I have to ask you to forgive me for my voice because I am recovering from the most vicious flu I've ever had in my life. I'm just happy to be alive and able to continue trading profitably this week. So with that said, let's get into the recap. The first trade I want to talk about is USO, United States Oil. If you've been following me for any amount of time, you know that I've been trading oil profitably since last year sometime, and this year is no different. We're up thousands and thousands of dollars on oil. Right now, or starting this week, I was holding 3,000 shares of USO at an 1869 average. We peaked at $21.50 a share for almost $9,000 in profit, but I'm looking for the bigger move. And so right now, this week, we sold just 500 shares just to pay ourselves a little bit at $21.25 average. And after that, after Wednesday's inventory, we got a small sell-off in oil, and it broke down a little bit. And today it popped up. Today being Friday, May 8th, popped up a little bit, and I sold another 500 shares at $20.42 average, just to lock in some more profit. So now I'm long 2,000 shares with an 1869 average still, looking for the bigger move. I'm looking for $65 a barrel to exit my position, and I'm looking to scale out over $22 with the rest of my position. But if USO can't hold the $20 area, I could just bail and lock in the rest of my profits, look to accumulate lower, or scale in again over new highs. Either way, the cool thing about this trade now is we're firmly in the driver's seat, and I think we're still going higher, and I don't think anything is going to change after the big run that we've had in the past couple of weeks on oil. I expected this breather or pullback, whatever you want to call it. It's perfectly normal. Next week I'm definitely looking for the next leg up, however. Another trade I want to talk about is RAD, Rite Aid Corp. Traded this a couple times this year, 100% success. We got in Rite Aid initially on, let's see, I guess it was back in April 22nd. We got in at 822. It shot up to 841, but it couldn't really break that 850 area. I was looking for the break of the 850 area and the move back to $9. We never got that. What ended up happening was a period of mass market weakness, and Rite Aid sold off. I didn't sell my position. I only had 3,000 shares. I wasn't super heavy, and like I said, I was definitely looking for the $9 move. Rite Aid pulled back with such extremeness down to the 760 area that it was a good opportunity after it breached the support level to scale in. I averaged down on my position, and I ended up with an 804 average on Rite Aid. Next couple days the market recovered, and of course Rite Aid recovered along with it. We got a relief rally. I sold through 825, ended up getting out for an 815 average, made about $1,000 on that trade. Wasn't an amazing trade. It didn't really pan out how I had planned, but you got to take what the market gives you, and in this case it gave us the opportunity to get a much better price and to still get out with profit. So we took that opportunity and we ran with it. I'm still watching Rite Aid for an entry. I still like it to $9, but it's just not ready yet. So TRQ, Turquoise Hill, was another trade we've been in for a long time. We got in TRQ initially on April 27th. Where's that at? April 27th. We got in right here on April 27th with a 413 average. Right about there. So we ended up, what I wanted to see on TRQ here was a break over 450. I wanted to see it break out. I wanted to see it break this. Let's see. Right about there. I wanted to see it break this 450 area and make a move back up toward $5. However, especially with the underlying catalyst involved, We never actually got that move. Instead, we just kind of flirted with the 440 area for a while. Ended up exiting that trade with an average of 434. We locked up about $1,300 on the trade. Like I said, another amazing, not an amazing trade, but another profitable trade that we gave plenty of time to get out. It just never worked out in our favor. I was looking for 50 cent or better move on this trade, and unfortunately we never got it, but it was never against us at any point. And we picked strong trades with strong fundamentals and a breakout a breakout chart setup. In this chart, if you look, we have multiple resistance levels here, right over the 410 area, going back through 2014. If I zoom it out here, we have resistance here from going back to early 2014. So we picked the right area on the chart. The stock did move up, but it wasn't the breakout that we were looking for, and it since sold off after our exit, but we locked in our profits, and it was another winning trade. And for this week, guys, we were 100% with wins. We didn't have any trades go against us at any time. Another one I want to talk about, IACI, Interactive Corp. Interactive Corp is coming off of earnings. It was an earnings beat. Let's see, we got in this trade on May 6th, which is right here. We got on this trade on May 6th at 73.58 was our average. Okay, so we had a push up the next day. It gapped up, sold off. We hit a high of 74.41, and then today, Friday, May 8th, we hit a high of 74.73 before it came in and closed near our entry price. So I ended up bailing on this trade for a $55 winner. It covered commissions and my lunch cost for the day. I was looking for a multiple point move here, and we didn't get it. It failed to break new highs each time. We were testing the all-time highs, which previous to the 74.40 area was $74 or so. So we were looking for a move towards 75 and hold. But even though the market on Thursday and Friday of this week were incredibly strong, this stock put in two big red bars. So I opted to cut my losses and keep my winners small here, I guess, and just bail on the trade. The one thing when we look at trading strong stocks with a strong catalyst, we're looking for breakout. But when the market is actually working in our favor and we're not experiencing a period of extreme bearishness or volatility, we want to see the stock move and trend in the direction of the market. And when it fails to do that, that's usually a pretty bearish signal that the market isn't, or that the stock isn't ready to move. And so I'd be concerned that it's unable to hold these highs. I'll be watching it next week to see what it does, but I have no interest in being a part of this trade anymore. So that's why I took the small profits on it, and I bailed on it. Another trade we took this week was HME. We got in this trade on May 7th with a 75.60 average entry, which is right here. We got in back here on this big green bar. During the course of the day, it shot up to 77.02. We had a 1.5 on this trade, or nearly a 1.5 on this trade. It failed to hold the $77 area and give up most of those gains intraday. I was okay with it because we did close over $76, and again, we're testing the all-time highs on the stock coming off of earnings. We had a good catalyst behind us, and we put in another strong market day. It tested that $77 area again and failed and ended up closing near our entry. So again, I bailed on that for a small profit of about $110 or so. Not really looking to hold on to stocks that cannot move up when the market is moving up. So if they're not ready to make new highs yet, we had our opportunity to profit up here. We left a lot of money on the table, but we are not going to let them go against us. It's critical part of risk management. We teach that in our swing trade courses. It's critical for traders to cut their losses early or take the small win. Even though you leave money on the table, you're never going to go broke paying yourself, and it's important to remember that. In these times where we are experiencing wild volatility in the broader markets, stocks are going to do unpredictable things. And so in times where the market moves up and the stocks that are strong that don't want to, we don't want to be in those, because when the market turns weak, those are going to likely be the first stocks to sell off in a weak market. And again, folks, I apologize for my horrid voice. It is very difficult for me to talk. One other trade that we took this week was on Apple. Apple, we did play pretty well. I've traded Apple this year 5, 6, 7 times with 100% success so far, and this time was no different. So after we had this big pop up on earnings, we made all-time highs at 134.54 or so. Apple sold off, got caught up in market weakness, had some issues with the iWatch, put in a massive move to the downside, giving up 10 points in just 3 days. And it bounced up hard on one day. It turned out to be a dead cat bounce on May 1st. And again, it continued to sell off to below 123. I think it hit 123.30 or so was the low of that move down. And we put in a curl here. Now, Apple is notorious for holding its moving averages most of the time. The 50 moving average, which is this white line right here, you can see post earnings from the post earnings from the fourth quarter of last year, which were posted on January of this year. Apple never tested its 50 moving average until it came back down on March 12th. And after that, it popped back up, came down, tested it again on March 26th. It popped up, came back down, tested it again on April 1st, and it popped back up. So the point is Apple respects its moving averages most of the time, and the 50 moving average carries a lot of weight when Apple trades. And so when it gets breached, it tends to be a magnet for moves back toward the moving average. So on April 30th, it broke and closed below the 50 moving average, and the next day it moved up nearly 6 points over that 50 moving average. Again, it sold off, and we got long when it broke down. We got long on April 7th. It broke down on May 7th. We got long. After it broke down May 6th, closed below. May 7th, it popped up and pierced the 50 moving average, which is about where we got long at. And then on May 8th, which was Friday, today, it ended up popping up and hitting a high of 127.62. I only took this trade. I took this trade yesterday, closed it out today. I had about $900 in profit on it. Apple is trading inside of a range between 130 and 130 and about 123, maybe 129, 123. So I don't really like being mid-range in Apple. I'll take profits on it when I have it. Like I said, look to accumulate Apple under 125 or over 129, 130. Anywhere inside that level, you're just in a range. And so knowing this, we have the opportunity to get in at a much better price by buying those moving averages. And that's exactly what we did this time, maintaining our 100% win rate. So this week we locked up just under $3,000 in profit from swing trading alone. Not to mention our day trades on PTBI and Gevo and a few of the other stocks that were big momentum winners for us this week. If you guys have any questions about any of these trades or about any of my analysis on them, please contact me, Jeff at warriortrading.com. I'm always around, always willing to talk or answer questions about trades or anything you guys see in these videos. You can also get hold of me on Skype. My handle on Skype is Swing Trade Warrior. And if you're interested in checking out where we trade at or our trade alerts, go to warriortrading.com. We're no longer offering the free trial. We've actually run out of room. So what we're doing is we're offering 15% off our first month membership with us. There's information on the website about how to get that deal, but we're no longer doing free trials, so demand has been pretty huge and we're stoked about that. We're very happy with our performance this year, and other people are too. So feel free to check us out, guys. If you have any questions, contact information is below. Other than that, everybody have a great weekend. Thanks.